Hi, this is Matt with EquiPredict Analytics. In this video, we're going to be reviewing a fixed cycle in the S&P 500 that we've been keeping an eye on for, I would say, the majority of 2025 at this point. We're going to be taking a look at how that's still an operative cycle. We're also going to be taking a look at a dynamic cycle, forecasting cycle that we've picked up, as well as a weighted commodity forecasting model that we shared in a prior video, and we're going to see how that's kind of playing out and what it tells us, it's going to tell us about what's going to unfold over the next month or two. So again, just briefly, if you're enjoying some of the content we're providing here, please do subscribe to the channel. You can also head over to our website, EquiPredict.com. We've got a lot of information over there regarding market forecasting. You can pick up our free quarterly forecast there as well. We have some articles over there regarding market forecasting open to our readers. You can read about our subscription model, as well as our green, red, and blue wave forecasting models, as well as our exogenous leading data forecasting models, which are quite powerful. So again, it's EquiPredict.com. So up on the screen here, we've got our fixed cycle in the S&P 500. And just as a really brief recap for those folks who are newer to the channel or newer to this to this fixed cycle model, what we've done is we've essentially gone back. This was several months ago, I think in the spring or so. We went ahead and picked a really strong cycle low in the S&P 500, which was that August 2024 sell-off. We chose just simply the first cycle low after that, which was just after the first week in September of 2024. It's around a 35 or so calendar day cycle. We find it's important to include the gaps, the weekends, and the non-trading days, due to the fact that the world economies continue to hum in the financial markets, continue to be influenced by the economies of the world that continue to operate even when the financial markets are closed. So that's why you're going to see these gaps in between. This is obviously a Labor Day gap, these little red lines here. This was a Monday, Sunday, and then a Saturday. Markets were closed, but as you can see on September 2nd, 2024, once the markets opened, we had a strong candle day, a strong selling day right there that led into the next cycle low, going into the second week of September, and then off to the races it went into the next cycle high. So the way these cycles work, if we go back in time, you're going to see that although it's not perfect, they do a really good job, the fixed cycles, at sort of honing in on the cycle of the price action. It's not, again, like I said, not perfect, but it does a really good job at, if you're, for example, choosing to go long in the S&P 500, it gives you a sense of when you should be picking your long entries on these fixed cycle lows. If I'm just going to fast forward or rewind all the way back in time, all of the limitations of the software and the fixed cycles here, you're going to see that the next cycle low is likely around here, early November of 2024, and then again it goes back in time. So we're going to actually go forward in time, and you're going to see that the fixed cycle continues to do a good job even up to today. We're into 2025 now, and you're going to see that fixed cycle low that's anchored all the way back in August of 2024 did a superb job at picking that cycle low of the April sell-off, the February to April sell-off in 2025. You can see here that maybe you went long here towards the cycle low, break even at the cycle high, or possibly for a slight loss. But then if you had picked this cycle low, cycle high here, you've profited, and so on and so forth. So it's been a bull run ever since that April sell-off 2025, and you're going to see that again. Here we are today. This is the cycle high. We thought it was a good idea to do this video now because of the fact that we've closed out the trading week, and we are coincidentally also at the same time at this cycle high in the S&P 500. So it's just a point in time when I think you should be considering risk management measures for those who are technical analysis oriented. If you draw the sort of the channel line right now, we're sort of bumping up against the top of a channel in the S&P 500. Again, not necessary time, in our opinion, based upon all the factors that we're taking into consideration, to go extremely long right now in the S&P, just to be it's a sort of watch and wait period. We talked about sort of looking at the weighted commodity forecasting model that we had implemented and shared. I think it was in the last video. You're going to see that it doesn't do a precise job of telling us exactly what the price action is going to do, but it provides some directionality for the general marketplace. You can see going back to February of 2025 this year, that sort of this commodity weighted forecast sort of told us that the price action was going to be going downwards. It called the bottom here in late March, but in actuality it materialized towards this early April low here, and then it's led us to look for the markets to continue to rise. One thing we find interesting is that right now that the next sort of fixed cycle low aligns with this commodity weighted forecast, this composite going down into that next cycle low before it starts to rise again. So that also adds weight and evidence to the argument that we're likely to see at least some pressure in the markets going into this next cycle low into the late September. We're also taking a look at a dynamic cycle that we've uncovered here in the S&P, and what you're going to see is that again, this one also aligns coincidentally with this next cycle low. So I would, at this particular point in time, sort of turn on your risk management measures. It's sort of a watch and wait period of time to see what's going to happen into this next cycle low that is supposed to materialize sometime towards the last week of September, early October. So I hope that helps in your trading journey. Good luck, and do be careful out there. Take care.